Hey everybody, Tim Albrecht here. Welcome to this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Before we jump into today's question, I want to give a shout out to the YFP planning team that makes this segment possible. YFP Planning offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. You can learn more and book a free discovery call by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Alysha in Seattle, Washington.
Hello, this is Alysha from Seattle, Washington. My husband and I installed solar panels on our home earlier this year. We are wondering how to best maximize the IRS tax credit. Our understanding is that it's a credit when you go to file your taxes and not a refund. We are expecting about $10,000 in the credit, and for reference, we usually end up owing around $1,000 when we file our taxes. Thanks for any and all insight.
Thank you, Alysha, for submitting your question to be featured on this week's Ask a YFP CFP segment of the podcast. Tim Baker, what are your thoughts?
Yeah, another great question with regard to tax and some of the renewable energy things that we're seeing more with clients. I think, this is definitely there's a federal program that I'll kind of walk through. It's going to differ state by state, obviously, but we can kind of talk about, what the credit is and all that stuff. So first, I want to talk very broadly, Tim, in terms of like what a tax credit is versus, a deduction. So a tax credit is a dollar for dollar reduction in the amount of income tax you owe that you would otherwise owe. So let's pretend at the end of the year, I owe $20,000. I basically take my $2,000 tax credit and boom, I owe $18,000. A deduction, on the other hand, is for me to get to that $20,000 number, I have to make, let's say, $200,000 or $250,000, and then I get a deduction, say, for $10,000 for something I did. Now the government is taxing me on $240,000. So deductions are less valuable than credits. They're both good, but the credit is basically one of the best things you can get, when filing your taxes. The tax credit that we're talking about with regard to solar energy is non-refundable, which means that the credit can't be used to increase your tax refund or to create a tax refund when you already have one. So in other words, your savings cannot exceed the amount of tax you owe. So again, if I owe $20,000, or let's say I owe $2,000 and my tax credit is $5,000, then I don't get that $3,000. I basically carry that forward. So and for this particular credit, you can roll that 5 years into the future. So the federal, what we're talking more with this question, the federal residential solar energy credit is a tax credit that can be claimed on your federal taxes. Every state's different, but I think Washington has a very similar. They might actually mirror the federal. I'm not positive on that, so don't hold me to that. For a percentage of the cost of the panels. So for panels, Tim, that were installed in between 2020 and 2022, it's a 26% credit for that cost. It was actually more in 2019. It was actually 30%. And it'll be 22% for 2023. And then it's set to expire in 2024. So just to recap that, because I kind of jumped around, 2019, it was 30%. From 2020 to 2022, it was 26%. It decreases to 22% in 2023 and then expires in 2024. Now, news from the Inflation Reduction Act that the Biden administration is working on should be extending this program. And I actually think it's going to extend it to the 30% mark. And I'll kind of break that down here in a second of how we calculate that. So to basically get the credit, the solar panels must be placed in service during the tax year and generate electricity for your primary or secondary home that's located in the United States. You have to own the system. So you can actually, if you're leasing a property and you install it, you can actually take the credit even though you don't own the property, you own the system. And it has to be original installation, so you can't take the credit if you kind of reinstalled it from somewhere. If you receive any subsidies from the utility, then that gets subtracted from how you calculate. So let's pretend, Tim, that it takes $20,000 to install and you get $1,000 rebate from your utility, then it would be $19,000 times that 26%, which would mean the credit that you receive is $4,940. And again, you could take that all in year one, or if you kind of get into that non-refundable stuff, you can carry it forward for 5 years. If you receive a cash incentive, so those are out there too. So the utility says like, hey, we'll give you $2,000 cash to do this. that doesn't necessarily affect the calculation, but it does affect that would technically be taxable income. So that the example, if you made $200,000 as a household, you would then be making $202,000, which would affect everything related to your taxes. So basically the way to do this, Tim, is you would fill out form 5695. It's the residential energy credits, and it breaks everything down there. And in particular with a solar system, you would basically be filling in the qualified solar electric property cost. And then you would do the calculation, and that basically feeds up to Schedule 3, line 5 on Schedule 3. And that's how it basically flows through back up to the 1040. It's pretty complicated. Again, we're big proponents of working with a professional. The thing that I was kind of checking the math, and I think the question said that we are expecting a $10,000 credit. If you do $10,000 divided by 0.26, that would mean that the cost would be $38,000. Now, in the state of Washington, it's shown that the average cost of a solar panel installation ranges from $12,452 to $16,848. So if the credit is that much, maybe you just installed a lot of solar panels, or there's there's a misalignment of what the credit actually will be.
Yeah.
So that's just, again, another, I think, point in the column of talk to a tax professional and just make sure that you're maximizing, what you can from, when you file your taxes this year.
And Tim, I thought one of the first points you made is really interesting and might apply here if it truly is that $10,000 credit, is that the timing of it. And if it can't become net positive, my kind of understanding of what you said, so we can't enhance, a refund or have a refund situation because of the credit, and therefore you have to roll it over. That then gets into some of the strategy for the future years.
Yes.
To be able to make sure, because you might have said this and I didn't hear it. Is there a time window on that rollover? So like if you don't,
from my understanding, it's 5 years. It can be rolled.
Okay.
It can be rolled forward 5 years until you basically use up that credit.
So you've got a window of time to make sure you are able to get that full credit
yes.
before we leave. Okay.
Yep.
Yeah, great stuff. I suspect that many others are listening. In our neighborhood, Tim, we've had, I think, 3 of these go up in the last 6 to 12 months. And anytime I walk by, I always wonder, like, what's the cost of doing that? What's the credits associated doing that? So
yeah,
I suspect more people might be thinking about this, especially if we see, as you mentioned in the work that the Biden administration does, kind of an expansion or back to return of that 30%.
Yeah. And I know, me personally, I'm looking at like, what are they doing for EVs? And, some of those have been locked out after a while. So we probably should, when, the ink's drying on that legislation, we probably should, do some type of episode around like what to look for from a planning perspective, from a tax perspective.
That's right.
With regard to that legislation, because that could, be impactful for a lot of our listeners.
Yeah. Great stuff. Alysha, thanks so much again for taking time to submit your question. And it's a small thank you. We're going to be sending you a super comfy YFP t-shirt. And for those listening, we'd love to hear from you with your question. You can submit that question by either going to yourfinancialpharmacist.com/ask-YFP, or you can send us an email at info@yourfinancialpharmacist.com. As we wrap up this week's Ask a YFP CFP segment of the podcast, an important reminder that the content that we discuss is provided for informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. For more information about this, you can visit yourfinancialpharmacist.com/disclaimer. Thanks so much for listening and have a great rest of your week.